Hello guys, welcome back to a new episode. RallyTop Investing 3.0 SMC Masterclass here. In this episode, I want to show to you an unbeatable 1H strategy. The reason I'm doing this is simple. You cannot afford to cross to 2027 with losing streaks. And that is why I have decided to do this video in order for you to master simple, repeatable, and straightforward strategy. You need only 4 steps to be profitable using this strategy. And you need to pay attention. You need to follow me from the beginning to the end of this video. Otherwise, you are going to get it all wrong. The first step is for you to use the daily time frame. The reason why I have always been talking about the daily time frame is simply because for me, the daily time frame is like the flagship of all time frames when we are talking about the financial markets or the forex market in particular. The daily time frame has a lot of data that we can actually draw from, and by the time we get to the lower time frame, the data we got from the daily time frame is going to help us tremendously. For example, if you get to the daily time frame, you do not need to start looking for price that is making higher high, higher low, higher high, higher low, and all of that. If you do this, especially as a beginner or an intermediate trader, it's going to really confuse you a lot. So what you need the daily time frame for is to be able to determine the direction of the market. And in determining the direction of the market, you can do that simply by using each of the candlesticks that you find on the daily time frame. For example, if you find on the daily time frame that price on day 1 printed a bullish structure such as this, and now day 2 it also printed another bullish structure such as this, and this day 2 candle has closed above the high of day 1. This is showing to you clearly that the following day price is likely to continue in the bullish direction. So that's why the daily candle is so important for you to understand. This step 1, that's all you need it for. Now, once you find that on the daily time frame, you move to step 2. What are you going to look for when you move to step 2? Now, step 2, as soon as this very candle closes above this previous day's candle, you will need to pick your horizontal tool and mark the high and the low of that candle. So, this is what you need the daily candle for. That's all. It's as simple. You see, you have been wired to believing that trading the financial market or the forex market is complex. It is actually not complex if you understand what you are doing in the market. Now, but I do not want you to take the simplicity of this strategy for granted, because I know some of us will think that, oh, this is too simple. We cannot make money with this. So once you mark out the high and low of that bullish candle, you move to step 3. And now step 3 is going to be that you go to the lower time frame, which is the 1H in this instance. Now, before we go further, let me tell you something about the 1H time frame that a lot of traders do not know about. Now, if you are talking about price action, we want to look at the price action on the lower time frame. The 1H will give you all that you require. 1H time frame is a strategic time frame when you are talking about the lower time frames. Now, for example, irrespective of the strategy you are using, look, if you see a break of structure on the 1H, it carries weight. Many of us do not know the significance of a break of structure. Whenever you find a break of structure, it is simply telling you where the market makers are intending to move price to. If you find a break of structure to the upside, it is a clear indication that the smart money is about to push price higher. If you find break of structure to the downside, is an indication that the big players want to move price lower. So you need to make good use of this information I'm giving to you now. So on the 1H time frame, you want to find a break of structure. For example, this is your daily time frame that you have marked high and low. And now price start. Remember, this is a bullish candle. It opens below and closes above. When the next day opens, price will try to retrace back down within this high and this low. Now, let me tell you the actual process of doing this thing. You see this daily candle. Once it closes, all right, you mark the high and low. The following day, you will need to be sure that you are at your desk before 1 a.m. Eastern. If you are living in Nigeria, that will be about 7 a.m. in the morning. You need to be sure to be at your desk before that time. All right? The reason is simple. You want to focus on the London key zone. When price is approaching the opening of the London key zone, that's where you want to pay rapt attention. So as price will open and pushing down, you want to wait for a break of structure, or what you can call market structure shift. For example, you are seeing here lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now you need to wait for price to shift structure from this bearish structure to bullish structure by breaking this high. Once you find that break, and this break has to happen before London key zone opens. Once you find this break, now you will wait. You won't do anything. You wait for price to retrace, and then you identify a valid area of interest around this zone, this point, and take your trade from there. Now, your valid area of interest could be your order flow, order block, or fair value gap, or whatever that you use as your entry trigger. Okay? So you will want to take trade from there. That will be a high probability trade. Now, one more thing. You see, you have to use this session indicator. I use it to simplify my trading for me using this strategy. You can get the indicator right there on your trading view. It's free. All you need to do is to search for ICT session indicator or key zones session indicator. Any of them will serve the same purpose. It's just that for me, I configure my timing for London key zone to be between 2 to 5 a.m. Eastern, and the New York key zone to be between the 7 to 10 a.m. Eastern. So simple. So once you configure that, you want to use it. Once you activate your session indicator, you want to see this break of structure before the London key zone. Now remember, the range of Asian high and low, they are huge liquidity pools. So sometimes, if you find this scenario within this box, when it has taken out Asian low. In the case of a bullish structure, once it takes out Asian low within this high and low of the previous day's candle, then that is a filter for you to enter the trade. Okay, it's an added confluence for you. In fact, sometimes it can be the only confluence for you. Please take note of everything I'm saying now. Don't plan to rush to the comment section and tell me it's not working. I will implore you to use this strategy on 30 trades that you have entered and journal every single one of them. And then at the end of the 30 trades that you have taken, look at your trading journal and see how far this strategy has worked or not worked before you run to the comment section to start writing what you don't know. Okay? So that's about that. We want to move to step 4. But before we go to step 4, if you are new to our channel, please hit that subscribe button now and become part of the family, and turn on the notification so that anytime we upload a new video, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately. It is completely free. Okay? Right there you gain a lot of benefits. And if you want to upscale your trading, we are going to 2027 now. If you want to really upgrade your skill of trading and you don't want to get into 2027 with losing streaks, you can actually join our VIP community. We have structured mentorship program that will help you to become profitable in not too long a time. Okay? And we have a special mentorship program that is coming up this December. But that mentorship program is for those who are scalpers who really want to make money in 2027 using simple scalping strategy. All right? Trust me, if you join this special mentorship program, which is going to last only for 4 weeks, and already admission is open, so admission will be closing on Friday. Okay? If you join this special mentorship program, I can assure you that in 2027, you'll be smiling to the bank almost every week. For the first 5 students that will make payment, we are going to give them 20% discount. So hurry up now and contact me on Telegram. I will leave my DM on Telegram, so contact me there, or send me a mail at my email address. I'm going to leave all the links in the description. Now, moving to step 4. Now, I've told you step 3. This is the pattern. This is the kind of scenario you want to see within this previous day's high and low. But it is not all the time you will find this. Sometimes you need to get to step 4. Price will rotate back down and take out the low of the previous day's candle. It may take out the low with this hammer, something like a hammer like this, sweeps the low and closes bullish. If you find this kind of thing, you don't need to wait for any other confirmation. You need to just grab your long position and enter the trade at the close of this candle. Okay, just stop loss below, and you target 1 to 3. By the way, this strategy uses 1 to 3. So all you need to do is to just target 1 to 3, and that will be all. Okay, just target 1 to 3. So that's about that one on step 4. Now, let me give you more information here. If you find this candle, all right, that also sweeps Asian low, this is an added advantage. Sometimes it may not sweep the daily low. It may still be inside of here, but sweeps Asian low with this type of candle, this hammer. it is still the same thing. Take your trade from there to go long. Now remember, everything I'm showing you using this bullish structure is exactly the same thing when we are talking about the bearish structure. All you need to do is to invert what I'm telling you now. All right? So if you don't find a hammer, if you find something like this within this box at the Asian low, when it takes out the Asian low, it is still the same thing as this. I hope you understand what I'm trying to explain to you. I'm slow because I want you to get every detail of what we're talking about. So now, that's all you need. If you can master these 4 steps, trust me, in 2027, you will be among the top 1% of successful traders in the world. I'm going to take you to the live chart now and show you 1 or 2 examples. So this is USD CAD daily time frame. Like I told you, you need to see 2 bearish candle or 2 bullish candle depending on the direction of the market before you can take any action. And as you can see, we have sufficient bearish candles closing below each other. This is the candle that we want to use as a test run. As you can see, this candle, it has closed below the low of this very candle wick, and has also closed below the low of this previous bearish candle, even below the low of this one too. So what we want to do is grab your horizontal tool, mark the high of this candle. So simple. So I'm going to mark the low of this candle as well. So that's it. Once you have marked that, we want to go to the lower time frame, which is the 1H, to now look at what I told you about. So this is the 1H time frame of USD CAD. This is our high, our previous daily candle high, and this is the low of our previous daily candle low. And I said, once it is 1 a.m. Eastern time, before 1 a.m. Eastern time, be on your desk so that you can begin to track the market. First of all, when you get to your desk before 1 a.m. Eastern time, go to the 1H time frame and activate your indicator, your session indicator on the 1H time frame. Remember, we want to trade on the 11th of December. So now this is the 11th of December. This light pink box that you're seeing is my London key zone, and this is my New York key zone, and this is my Asia key zone. Okay, so now look at this carefully. We first of all want to identify a market structure shift or break of structure. If it breaks to the upside, that means that is bullish. If it breaks to the downside, that means that is bearish. So let me show you something from this high. If you come to this low, price now pull back and then drop. So this is a break of structure. So we mark it right here as our break of structure. Now, after that break of structure, you want to wait for price to rotate back up, and then you want to identify your valid area of interest. I've told you your area of interest can be order block, order flow, fair value gap, or whatever, breakout block, whatever that you use as your entry trigger. Now for me, for this very example, we want to look at this. What do you call this, guys? What do you call this? I'm sure you know that this is fair value gap. All right, and price rotated back up and tap into that fair value gap. So you could have gone, enter your trade, going short from here. let me just quickly use the short position to take the trade from here, and your stop loss just above, and you are targeting 1 to 3. So somewhere around there is 1 to 3, just like so. Okay, so that's one way to enter this trade here. Now another way, let me take out this rectangle. Another way is this. Look at this Asian high. This is my Asian low. Now if you look at this Asian high, price has swept this Asian high. Look at it carefully. That's my Asian high, and price swept it. I've told you this is a sweep. This one is a sweep. Okay, if you go to the 4H, you'll find out that this is a sweep. Now it took out this Asian high, and immediately afterward, look at this bearish candle close below this bullish candle that printed outside of this Asian high. Can you see that? Now how will you want to take the trade? All you need to do is to take the trade going short immediately after this candle, this bearish candle closes. Why do you want to use this bullish candle to take your trade? Now if this bullish candle enters into this bearish candle up to 50%, you need to use this bullish candle. But if it did not come up to 50%, you need to use this bearish candle. All right, now so you are going to take your trade immediately there, and your stop loss just above, and you target 1 to 3. 1 to 3, simple. So these are the trades you would have taken. So 2 ways to take the trade there. Now I'm going to take you to the daily time frame again and show you the second trade. But meanwhile, let's deactivate our session indicator to make the chart cleaner. Here is another example. Now if I ask you, is this bullish structure or bearish structure? Most probably you will say it is bullish structure. Yes, because you don't need all these type of structures before you can know the direction of the market. You can simply use each of these candles to determine the structure or the direction of the market. As you can see, bullish candles are closing above the previous bullish candle. So, but we want to use this candle as our example here. As you can see, this candle, this bullish candle, took out the high of this previous day's candle and took out the low of the previous day's candle. If I ask you, what is the name of this candle? Most probably, most of you will say this is bullish engulfing candle, which is right. So whenever you find a bullish engulfing candle, meaning that the following day, price is most likely to continue in the bullish direction. So once you can identify that, pick your horizontal line, mark the high of this candle. So mark out the low of this candle right there as well. So that's all you need the daily time frame for. Now let us assume for a moment that we did not see anything happening on the right hand side of this candle. You need to wait for this candle to close. Once this candle closes, now you go to bed. The following day, be sure to be at your desk before 1 a.m. Eastern time. All right, so now that we have marked out the high and low, we want to wait for the following day. And therefore the following day by 1 a.m. or before 1 a.m. I'm already at my desk, and I want to go to the 1H time frame. So we can now go to the 1H time frame. Okay, so this is the 1H time frame, and this is our previous day's high, previous day's low is here. Now we want to activate our session indicator, that is. And as you can see, this is our session indicator. Now the first thing we are going to be trading on the 10th. Is it on the 10th? Yes, on the 10th. That's when we are going to be trading. Now I said wait for a break of structure. wait for a break of structure. And where is the break of structure here? Look at this, guys. Look at this one. There is a break of structure right there. And I said, if it breaks up, know that the smart money wants to take price higher. If it breaks below, know that the smart money wants to take price lower. Here, it breaks above and closes above it. All right? Now, you don't need to take any action in the market when you have seen this. Wait for price to rotate back, and you want to identify your area of interest. And right here, look at this area of interest, this OB. If we mark this OB, look, this OB is already mitigated. So we cannot use that. So we take that out. But we want to enter this trade because it has given us market structure shift and it's coming back down. So now take a look at this. See that structure low? This wick took out the structure low here. Can you see that? Once you see it, that it has taken out the previous structure low, this wick becomes a strong zone for you to take trade from. It becomes a very strong zone for you to take trade from. So right there, we can take our trade going higher from there. And you want to target 1 to 3. Very simple and straightforward. Just give a buffer and then go for 1 to 3. Roughly about 1 to 3 there. Okay? So that's how to do it. Now, let me show you one more example before we call it a day. Let me deactivate this to make the chart cleaner. So let's get back to the daily time frame and let me show you one more example. So here is another example. Look at this candle as closed above this previous candle's high. Now pick your horizontal line, mark out the high of this candle and the low of this candle. That's all. And then let's assume we didn't see anything that happened on the right hand side. This happened last night. Okay? Let's assume. And we didn't see any of this. So the following day, before 1 a.m. Eastern time, I find myself at my desk and I want to go to the 1H time frame and start tracking price from there. So we go to the 1H now. So this is the 1H time frame. And remember, we want to trade on the 11th of December. This is our previous day's high and previous candles day's low. Now, I want to activate my session indicator. Here, as you can see, we want to trade on the 11th. This is the 11th of December. And look at this. Price came to take out the previous day's low. The previous day's candle low. It took it out with a candle wick. Can you see it? Let me show that to you quickly. Can you see this? It swept the low of the previous day's candle. And look at the way it closed. It closed bullish. Now remember, I told you, if it closed bullish, you don't need to wait for any confirmation. All you need to do is to just enter your trade directly from here. When the candle closes, put your stop loss just below and 1 to 3. Now, how about if you want to go to the lower time frame and get something better than this 1 to 3? How do you do that? Let me quickly show you that. Let me push this one aside. And now we want to mark out this very candle that swept the liquidity. And before we mark it out, look, this did not only sweep the previous day's candle low, it also swept this my Asian range low. Can you see that? This is an added confluence. And not only that, it broke structure here, but we're not going to be waiting for that break of structure because this candle is enough. So we want to now go to the lower time frame like the 5M and see whether we can actually refine this candle to get a better risk to reward. So what you need to do is to mark it out and then go to the 5M. So this is 5M. This is where price swept the previous day's low with this candle, this bearish candle. And after that, this candle closed above this bearish candle. This one is an inside bar. Okay? So immediately this candle closes above, you want to place your order to buy. Just take your buy tool, place an order there, and your stop loss just below this low. If you want to really maximize profit, look, the first point that you can target is this high. You can target this high as your first point, and now the second high you can target maybe this high. I don't know whether price will get there, but that's it. That's the ultimate high. There are 3 places here. You can also target this one. It's another high. So these are the 3 places. Target number 1, TP1, TP2, TP3. So let's see if price goes to TP2. Let's see. So let's see whether price went there, got there. Yes, price went to TP2. All right, let's see TP3, whether price got there as well. And boom, price got there as well, TP3. Can you see that? So this is the way for you to use this strategy. Very simple, straightforward. All you need to follow the process. That's okay. Just follow the process and then you'll be good to go. This is where we're going to drop the anchor. Again, if you are new to our channel, please just hit that subscribe button and become part of the family. Turn on the notification so that anytime we upload a new video such as this, you will not miss out of it. All right, guys. Thanks for watching. I see you in our next episode.